Yes. Any update? I'm getting answers from online. How about here and offline? 627, 716. I got one answer. How about others? How many of you have an answer, whether it is right or not? Okay, 3, 4. I can spare maximum 2-3 minutes more. Okay, try to quickly go through all the adjustments. 2-3 minutes more I can spare. Doubt? What about DNS allowance? Whether it forms part or not forms part. Assume. You can assume at your choice, but you have to write the assumption. Either you assume does not form part, either or you assume does form part. It's up to you, but you have to write the assumption. Okay. You can ask this from there itself. Okay. No need to come. Don't worry. About the DA, since the question is not clear, then we can take our assumption. Okay. No worries. I am assuming that it does not form part. Okay. So I'll answer only in that way. My assumption is it does not form part. We can assume otherwise also, no problem. Quickly finish it off. We have to solve that question. Then, Deepika, what were you doing till now? You came late. Okay, quicker read பண்ணுங்க அந்த question, okay? No worries. Just quickly read that, okay? We are about to solve that together, okay? Just have a quick reading of the question now. Ready with the answer? Very good. Yes. So friends, let's solve it together. Okay, let's not waste more time. Okay. Now. Keep quiet and listen. Keep quiet and listen. All right. So Mr. X, shh, keep quiet and listen. Mr. X retired from services of Messrs. Y Limited on 31st January 2024 after completing service of 30 years and 1 month. He has joined the company on 1/1/1994 at the age of 30 years and received the following on its retirement. So he is about to retire right now. Okay. He received gratuity, leave encashment, then he got a car, then he commuted pension, then he got a gift and another gift from his friends. Following are the other particulars. Okay, we'll finish that question. We'll read that question together first. Other particulars, he drew a basic salary of 20,000, 50% DNS allowance from 1st April to 31st January. Received a pension of 5,000 per month for a period of February and March after computation of the pension. Compute is gross salary. So rather, let's make it salary, okay? No problem. Gross salary, you have to deduct the standard deduction, that's it, okay? Let's make it salary, okay? I am about to compute the salary, okay? I am about to compute the taxable salary from the above for assessment year 24-25, assuming he exercises the option of shifting out of default tax rate provided under 115 BAC. So friends, one thing I can tell you, don't worry about 115 BAC. First you learn one old slab. Then as I've told you yesterday, we'll flip it. Okay, and the last day, I can give you some tips how to flip that. Okay, how to flip that dosha. There are certain tips, easy things are there. So there are certain head-wise comparison is there. By that you can easily understand that flipping technique. Are you all with me? Just like flipping omelette and all, you require a skill to flip it. Okay, it is just like that. This is nothing. BAC is nothing. Don't get terrified by 115 BAC. Let it be there. So first of all, let's start with the basic salary. So let's solve it together. So I'm writing a format, particulars and amount. And here we'll do the working notes. Okay. In exam, you can do the working notes in the next page. But here, to bring it under one page, I'm doing all the working notes parallelly. So first of all, we'll always start from the basic salary. And how much is the basic salary in the question? How much is the basic salary in the question? Where is that question? This is it. Yeah. Basic salary is 20,000. That from 1st April 23 to 31st January 24. Okay. Don't multiply it by 12 because he retired on January. So it is only 10 months. So 10 months into 20,000, it will be 2 lakh. So basic salary is only 2 lakh. So we'll write that here first. So basic salary 2 lakh. Now, how about the DNS allowance? They say 50% as the DNS allowance. 50% of what? Basic salary. 50% DNS allowance per month for period from 1st April to 31st January. So 50% of basic salary means how much? 1 lakh. And my assumption is this DA does not form part of the retirement benefit. This is what my assumption is because they are not mentioning anything. You can assume otherwise, okay? You can assume otherwise. You can assume that it forms part of the retirement benefit as well, no problem. Now listen. He received a pension of 5,000 per month for a period of 1st April 24 to 31st March. So 2 months he got a pension. This is after commutation. So this 5,000 is uncommuted pension. You tell me what is the treatment of uncommuted pension? Fully taxable without any exemption and all. So we can write uncommuted pension is fully taxable. So I'm writing uncommuted pension for February and March. So that is 5,000 into 2 months. That will be 10,000. That is fully taxable. Now, moving on with the next item, we will go to the additional, these are the additional informations. We'll go to the first adjustment, that is gratuity 6 lakh. Was covered under Payment of Gratuities Act 1972. So he is covered under Payment of Gratuities Act. So first of all, we will write gratuity. Can you claim any exemption for the gratuity? Yes. How much is the actual gratuity received? How much is the actual gratuity received? 6 lakhs. So actual gratuity received by that person is 6 lakh. So we'll write the actual gratuity here. Then let's write a working note over here. So gratuity, if you are a other sector employee, that means if you are not a government employee and you are covered under Payment of Gratuities Act, then you tell me, how do you compute the exemption? Lower of either 20 lakhs or actual gratuity received, that is 6 lakh, or 15 by 26 into last drawn salary. For that, the definition is salary plus DA, whether the DA forms part of retirement benefit or not. Hope you remember the definition. So last drawn salary, basic salary is 20,000 and last drawn DA is 10,000 rupees. Are you with me? So last drawn basic salary will be 20,000 and last drawn DA is 10,000. So 15 by 26 into that, into completed year of service or part thereof in excess of 6 months. You tell me how many years he have. 30 years and 1 month. That's it. So 30 years. So can you tell me what will be the third limit? 5 lakh 90,000. 19. Okay, 5 lakh 19,000. 231 will be the third limit. 230 or 231, both are fine. So whichever is lower means 519, 231 is the lower. So 519, 231. Can you tell me how much is the taxable gratuity? 80,000. 769. Due to that 31, I'm taking 769. No problem. You can write 70 also. No problem. Because anyways, we are gonna round it off the total income to the multiple of 10. So that 1 rupee doesn't make any difference. Okay, it's up to you. Now, moving on to the next one, friends. This is working note number 9. Yeah. So moving on to the second one. What is second one? Leave encashment of 3,30,000 for 330 days. Leave balance in his account. He was credited 30 days leave for each completed year of service. So there is a leave encashment. So first of all, let's write the leave encashment. Okay. So how much is the leave encashment? How much is the leave encashment amount? 3,30,000. You can claim an exemption. Why? Because this leave encashment is at the time of retirement. So how do you claim exemption for the leave encashment? Which are the limits? Number 1, rupees 25 lakhs. Number 2, actual leave encashment amount received, that is 330. Number 3, last 10 months standard salary. That too average of standard salary. So if there is no change in the salary, then it's the total of last 10 months salary. So you tell me, what is standard salary? Standard salary means basic salary plus DA forms part of the retirement benefit plus commission if it is expressed as a fixed percentage of your total turnover. So here DA, they are not talking about whether it forms part of the retirement benefit or not. So what to do? Assume that it is either forming part or does not forming part. And so it is up to you. I am assuming that DA does not form part of the retirement benefit. So what to do? 10 months into 20,000, because they are not talking about commission. So that will be 2 lakh. If you are assuming DA forms part of the retirement benefit, this limit will become 3 lakhs. That's it. And what is the last limit? Cash equivalent of leave at the credit of employee provided annual leave encashment shall not be more than 30 days. So let's go back to the question to understand how many leaves he have in a year. So they say he was credited 30 days leave for each completed year of service. So no problem. And the leave balance is 330. So what to do? First of all, the leave balance in number of days have to be converted into months. Into what to do? What is the next? You have to encash it. Encashing is based on the last drawn standard salary, that to the average. Are you with me? So that you already know the average is 2 lakh by 10. Why 2 lakh by 10? 2 lakh is last 10 months total salary. Averaging it means 2 lakh divided by 10. So can you tell me what is the third limit? Yes, 25 limit is the maximum. Yes. Can you help me with the math? 2 lakh 20. 2 lakh 20, right? Now you tell me whichever is lower. It is 2 lakh. 3 lakh, it is amended, okay? It is amended in the February 2022. Don't use old books. 2 lakh. So you claim that, and now you tell me how much is your taxable leave encashment? 1 lakh 30,000 is your taxable leave encashment. I think if you assume DA forms part of retirement benefit, then it will be 3 lakh. The exemption will be 3 lakh and only 30,000 will be taxable. It's up to you. In examination, you can choose anything. Both are fine. Yeah. So that's it. This is the second working note that we have. Moving on to the third one. What is the third one? As per the scheme of the company, he was offered a car which was purchased on 30th January 21 by the employer for 5 lakh. And the company has recovered 2 lakh from him for the car. The company depreciates the vehicle at a rate of 15% on SLM. So, as per the scheme of the company, he was offered a car at the time of retirement. What does that mean? Usage or transfer of ownership? Transfer of ownership only. Are you with me? So how do you value motor car transfer? Very simple. We will do another working note, perquisite. Motor car transferred. Motor car transferred. Now, first you take the actual cost of the motor car. How much is the actual cost of the motor car? How much is the actual cost of the motor car? 5 lakhs. So to the employer, actual cost 5 lakh. Now, when was the date of purchase by the employer? 30th January 2021. You tell me how many years he have used it. He retired on 31st January 2024. The company purchased that particular car on 30th January 2021. So how many years are there? From date to date, if you check, it is 3 completed years. Because 1 year means it starts from 1st January and ends with 31st December, not with the 1st January of next year. Are you with me? So here we can say that there are 3 clear and 1 more day is there. Okay, not 1 more, 2 more days is there actually. So it is 3. So what to do? 3 years is there. So how do you depreciate? Depreciation should be claimed at 20% under WDV. That we don't care what the company does. They are saying that company is doing SLM at 15%. Ignore that, because according to the perquisite valuation rule, what department say, you must take 20%, that too at what method? WDV method. So what to do? Depreciation for year 1 at 20%. And how much is 20% of 5 lakh? 1 lakh. In WDV means, how much is the closing value? 4 lakh. Again, depreciation year 2 at 20%. That will be 80,000. 3,20,000 will be the WDV. Again, depreciation at 20% for year 3. That will be how much? 64,000. Round figure 64,000. So how much will be the 256? That is the value. Now, is there any recovery from the employee? Is there any recovery from the employee? How much is the recovery? 2 lakh is the recovery from the employee. So you can deduct that. And how much will be the remaining amount? 56,000 shall be the taxable perquisite. So 56,000 shall be the taxable perquisite for the motor car. Are you all with me? If DA forms part of the exemption 330, yes. Okay. 330, how? 3 years, please explain again. Check the dates. Okay. Why not 15% in SLM? Check the perk value. Very simple. What is the perk value? Listen here. Are they saying 15% SLM? No. What department say? 20% on WDV. Okay. That's why we took 20% WDV. Got it? What they say in the question is irrelevant for us. So what is happening? Okay. Yeah. Ali Nawaz, you check the question. You will understand how 3 years. It's from date to date. Yes. Moving on. Moving on. What is next? 2 years only. You do one thing. Go take a calendar. Go take calendar from your mobile phone and check. From 2021 to 2024, how many years are there? In your calendar, it's showing only 2 years. Date is 3 years. 21, 22, 23, 24. Start counting with the finger also, it is 3 years. You don't have to take calendar for that. Now, moving on. What is next? Where were we? Okay, so pension. I missed the question. 1 second. Yeah. So an amount of 3 lakh has commuted pension 2/3 of his pension commutation. So he commuted 2/3 and he got how much? 3 lakh. He's getting gratuity. So how do you claim exemption? 1/3 of the amount if he. Your default microphone has changed to. What happened? Come again? Video stopped. What's happening? That too with a perfect. It got stuck. Video only have a problem. So it's scam, but it's not working. Seems like some kind of error. Deactivate, that's not working. Where is that deact? There's a problem with the mouse also. Why it's not working? It seems like an imported mouse. Okay, it's not at all working. What is this? Oh my God, somehow. Yeah. Now working. Okay, got it. So friends, where were we? Where were we? Online friends, am I audible? Online, am I audible? Please, whichever is lower. Yes, perfect. All right. So listen. So pension commutation. So we will write the commuted pension over here. So pension commuted or commuted pension. How much is the commuted pension? 3 lakhs. No. How much is the commuted pension? 3 or 2? It is 3 lakh. So 3 lakh is the commuted pension. You write that over here. Then you can claim an exemption. And how to claim the exemption, friends? Very simple. Since you are receiving gratuity, your exemption shall be 1/3 of the pension if you would have received had you commuted the entire pension. So you commuted how much? 2/3. Yes or no? So 2/3 and you received how much? 3 lakh. So how do you do it? Into 3 lakh into 3 divided by 2. So into 1/3. How much will be the exemption? 1 lakh 50,000. Now if you claim that 1 lakh 50,000, how much will be the what do you say? Amount taxable perk? 1 lakh 50,000. Yes. Now, then, is there anything else? Yes. Company presented him a gift voucher 6,000 on its retirement. What to do? Up to 5,000, you can claim an exemption. Excess taxable or full 6,000 taxable. It's up to you. Gift from employer. I'm saying 1,000 taxable because the value is 6,000 and exemption you can claim up to 5,000, and in my opinion only 1,000 required to be taxed because that's what we do in office. We always interpret everything in the benefit of assessee, so we know normally like that. Then what is next? His colleagues also gifted him a TV LCD worth 50,000 from their own contribution. What to do? Not taxable under salary and IFOS. Why not taxable under IFOS? First of all, two reasons are there. Number one, the value of the TV is exact 50. The gift value have to be how much? More than 50. Even though the TV's value is more than 50, it is not taxable. Why? TV is not a movable property according to the definition under IFOS. Because that definition have certain items like jewelry, bullions, coins, etc. There are certain things. Drawings, paintings, archaeological collections are there. Only those are considered as taxable gifts. TV, car, etc. are not a taxable gift, and hence it is not taxable under IFOS as well. Are you with me? We will cover 56 subsection 2 clause 10 as a part of this revision, so don't worry about that. So for the time being, it is not taxable under salary and IFOS. So I think done. Can you compute the gross salary now? Gross salary. Basic salary 2 plus 1 plus 10 plus 80, 769 plus 130 plus 56 plus 150 plus 1000. 7,27,770. Then you have to deduct what? Standard deduction. And how much is standard deduction? 50,000. You deduct that, how much will be the taxable net salary? 6,77,770 will be the taxable salary on an assumption that DA does not form part of the retirement benefit. Yes. DA forms part 627,770. Okay. That's the answer you are getting. Car portion alone gone wrong. Now I'm corrected. Then I understood about the car here. Okay. Hope you understood. Sir, please zoom out. Okay, zoom out. Okay. But if I zoom out, this is the problem. Yeah, I think almost everything is there in one page. Got it? Yes. Uncommuted pension we already computed, okay? Look at the third item. Third item is uncommuted pension, 5,000 into 2. Yes. So shall we move on? Shall we move on? We have one more question under salary, but let it be there. Let me compute some theory, okay? We'll complete some theory in the morning session so that I can throw you some questions in the afternoon session. Yes. So we'll complete house property, and I'll give you a break, okay? Because only that much we have in house property, because we are only doing the important things under house property. So without wasting time, let's complete house property. All right, great. So listen, house property is just like a gift for us. Why? Comparatively smaller chapter, small things, only lesser things you have to study. One question definitely they will ask in exam, and you can easily score that particular thing. 89 relief, they have never asked in question, okay? So I have no plans to cover 89 relief as a part of this revision, okay? We have to complete everything, right? So I haven't picked 89 relief. So income from house property, that's what we are about to discuss right now. So listen. So section 23, determination of gross annual value. So friends, listen. When it comes to house property, let's understand how do you compute income from house property, okay? Listen. First of all, you have to compute gross annual value of a property. Are you all with me? This is the first thing that you have to compute in house property. You need to compute what? GAV. And what is GAV? Gross annual value. Then from that you can claim municipal taxes paid as what? Deduction. Municipal taxes paid as what? Deduction. Then you will get what? Net annual value. You will get what? Net annual value. From the net annual value, you can claim what? Standard deduction at 30% under section 24A. Then you have interest on loan under 24B, that also you can claim. If you claim these two, the rest is said to be what? Taxable income from house property. Are you with me? Are you with me? This is the common computation format for computing income from house property. You compute the GAV first, then deduct the municipal taxes paid, then you will get the net annual value. From the net annual value, you can claim 30% of NAV as standard deduction. Then you can claim interest on loan. And if you claim everything, you will get the taxable income from house property. This is how you normally compute. Now we are about to discuss, for different types of property, there are different ways of computing GAV. There are different types of properties. So for different types of property, GAV computation also differs. So in examination, if they are asking you a question, the first thing to do is identify the type of property. Are you with me? Are you with me? The first thing in examination, if you see a question, you need to identify the type of property. Now let's discuss about each and every property. Every property is there. Every property is there in one page. This is it. This is more than enough. Every property is there in one page, and we will discuss everything by making use of this chart. You can compare and study. So listen, what is the first type of property? I want a good participation from your side. Read what is the first type of property. Let out property under section 23 subsection 1. So let's compute. How do you compute the gross annual value of a let out property? What's step number 1? Compare fair rent with the municipal value and consider whichever is higher. First of all, what is fair rent? Fair rent simply means market rent. The rent that normally that you have to pay for a similar property. Are you all with me? It is the market rent is said to be the fair rent. Commercial rent, we can say. Fair rent with the municipal value. What is municipal value? The local authority. Say in Chennai, it will be the corporation. Okay, the corporation will have an annual value of the property. Are you all listening? The corporation will have an annual value of the property, and they charge a percentage on this annual value to as the municipal taxes. You have to pay taxes to the corporation. If it's a municipality, you have to pay taxes to the municipality. If it's a village, you have to pay the taxes to the panchayat. Are you with me? So the taxes is levied based on the percentage of your municipal value. Municipal value doesn't mean the total value of the property. It is the annual value of the property determined by the municipality. On that annual value, you have to pay a percentage as the municipal taxes. So you need to go and check how much is the municipal value. That means another annual value of the property. So compare the fair rent and municipal value and pick the higher. That is step number 1. Then what is step number 2? The above result shall be compared with the standard rent and consider whichever is lower. What is standard rent? There is a thing called Rent Control Act in India. Okay, there is an act called what? Rent Control Act in India. Have you seen that Onion movie? In Onion movie, Kalabhavan Mani is charging excessive rent from a Appavi lady. And Onion is giving some dandane, giving some notes and all to him to eat and all. Have you seen that movie? If you haven't seen that movie, don't worry. Forget about movie and focus on the topic, okay? Don't worry. So that case, which is, I think Ambi is the one who's representing that lady in the court. That case is based on Rent Control Act, because there is an act. If a building owner is charging excessive rent from a tenant, that tenant can file a case in the court based on the Rent Control Act. Are you with me? Are you with me? So, in Rent Control Act, there will be annual rent that a person can levy from a particular property. Are you all here? In Rent Control Act, there will be an annual rent that a person can charge on a particular property. Then, first you do one thing, take the fair rent, compare it with the municipal value, pick the higher. That higher have to be compared with the standard rent and pick the lower. That lower figure is said to be what? That lower figure have a name. It is called as expected rent, because income tax department is expecting minimum this much rent. Rules Ramanujam. Who is rules Ramanujam? Onion movie. Ambi's character name is Ambi, right? Ramanujam. Oh, is that so? Oh, Ambi is his nickname. Okay. Rules Ramanujam. Okay, I forgot. Shankar movie, right? Okay. Indian 2 is also Shankar movie. You know what? Robo 2.0 is also Shankar movie. Okay. If we start discussing about Indian 2, I'll go mad. Okay. I'll jump from here. On the level of panni vechirke. Okay. Because maybe, especially if you are a 90 born person, you will have that fascination towards Indian 1. It's a cult classic. We used to say it's a cult classic movie, because on the level of the movie, that was so convincing. Mudiyadu. I think I have conveyed it. Okay, Indian 2, super. Come again. See it? CA Topper. Oh, is that a movie called CA Topper? Is that so? Oh, it's a Bollywood movie or Tamil movie? Which language it is? Come again? It's a series. It's a movie. Okay. It's a Bollywood movie? Maybe. ICA filed a petition. Why? They are degrading the CA profession. Okay. I don't know. Maybe that student is writing, failing, writing again, something like that. Okay. Why should ICA file a petition? Because there are a lot of people who are. No problem. It's a trailer. Wow. Nama enna thappu pannita. Somebody have produced a movie. Somebody have published the trailer. Somebody, ICA have filed a petition. What is our problem? Whether it is recorded or not, I haven't even seen the trailer also. ICA is going to punish me. Pathukala. All right, listen. Forget about all those things and all. So forget about that, and let's focus on the topic. Okay, so you go find out the fair rent and compare it with the municipal value and pick the higher. You compare that higher figure with the standard rent, pick the lower. That lower is said to be what, friends? Expected rent, because income tax department is expecting minimum that rent from your let out property. Now you compare that expected rent with the actual rent and consider the higher. Now you compare that expected rent with the actual rent and pick the higher. But one thing is there. However, if actual rent is lower due to vacancy, that means your tenant vacated the property. You are expecting a new tenant. The property is completely vacant and you are expecting a new tenant. Due to that vacancy factor, your actual rent came down. In that case, don't worry, then GAV shall be the actual rent itself, even if it is less. Normally, whichever is higher, either expected rent or actual rent, whichever is higher is the normal GAV. But if due to vacancy, if your actual rent is less due to vacancy factor, then don't worry, it is not your problem. Okay, don't worry, you can take the GAV as the lower actual rent itself, no problem. Are you all with me? Are you all with me? So if I ask you, how do you compute the GAV of a let out property? Start with the fair rent, municipal value, pick the higher. Higher with the standard rent and pick the lower, and that is said to be the expected rent. Expected rent and actual rent have to be compared and pick the higher. If actual rent is less due to vacancy, then pick the actual rent itself as the GAV. Done. Is that clear? Is that clear? What if in the question, municipal value is not given? What if the municipal value is not given? Fair rent is there, standard rent is there. Then what to do? You take the fair rent as the outcome of step number 1, because municipal value is not available. Then you take that fair rent with the standard rent and pick the lower. With the available figure, do it. Are you with me? What if standard rent is not given? Then don't do step number 2. Higher will be the expected rent. The step number 1, that higher will be the expected rent. Don't do step number 2. Don't take expected rent as 0 and compare that with the 0, and the 0 will be the lower. Don't do it mathematically, okay? You have to always be careful with that. Now, oh my God, okay. Yeah, ERV. What is ERV? Expectant. What is an ER? Rent value. Okay, 1 lakh. Then RRV, rent. What is that RRV? Realized rent. In this case, actually I didn't get your question first of all. Expected rent is 1 lakh and rent received is 80,000. That is 90 minus 10k vacancy. No. Then you have to take expected rent, because it is not less due to vacancy. It is anyways less. You got it? It have to be less due to vacancy. If it is less and there is a vacancy, no, you have to take the higher. Yes. Now, listen. Where were we? We were computing the GAV of let out property. So, fair rent, municipal value, higher with the standard rent, lower with the actual rent, higher. Now, second one, can you read the second type of property? Read it together. What is second type of property? Self-occupied property or unoccupied property. What is self-occupied property? I have a house. I am staying in my house. That house is called as self-occupied property. What is unoccupied property? I have a house in Chennai. I am staying in Delhi due to my work or business. My property in Chennai is said to be unoccupied property because nobody stays over there. Are you with me? Unoccupied property means I have a property. It is completely closed due to my job or business in some other cities. Then that property can be called as what? Unoccupied property. Now, what is the speciality? GAV of self-occupied property or unoccupied property shall be always 0. Rather than GAV, we can say NAV is 0. Why NAV is 0? Why? Because no deduction for the municipal taxes. You will not get any deduction for the municipal taxes. So imagine You have a self-occupied property. GAV is 0. Municipal taxes you will not get any deduction, and hence NAV will be 0. And there is no standard deduction because standard deduction is 30% of NAV. Now you can only claim one thing. What is that? Interest on loan. You can claim interest on loan and you can show a loss. No problem. If you have a self-occupied property with a loan, you can claim that interest on loan and you can show a loss, but it is subject to certain ceiling limits that we will study later. Is that point clear? Is that point clear? And friends, a person can show up to 2 houses as self-occupied house. No problem. If you have more than one house, then an assessee, being an individual or a chief, can treat up to 2 properties as self-occupied or unoccupied properties. No problem. Are you with me? Are you with me? What if I have 3 properties? 2 will be, any 2 at my choice will be self, and the third will be deemed let out property, and that's what we are about to discuss next. So we will directly go to the deemed let out property next. So what is deemed let out property? A person can show only 2 houses as what? Self-occupied properties. The third one, if you own and you are not letting it out, you are staying over there, have to be mandatorily or deemed to be a let out property. Are you with me? I have 3 houses. 2 let out, 1 self-occupied. Then 1 self-occupied, 0. 2 let out, you have to compute the GAV. I have 3 houses. Okay, 3 are self-occupied. Then what will happen? Out of 3, 2 will be self-occupied and that 1 will be deemed let out. Which one? I have to check the higher value. Whichever have the higher value have to be self-occupied. Whichever has the most efficient manner. Whichever has the lower value have to be the deemed let out property. That you have to check in exam. We will solve a question like that. 3 properties and all. We will solve a question with different permutation and combination. Are you with me? Are you with me? Now let's understand how do you value the GAV of a deemed let out property. Can you check? An assessee owns more than 2 properties for self-occupation, then the income from any 2 such properties at the option of the assessee shall be computed under self-occupied property and their annual value will be nil. Other properties shall be treated as deemed let out property and its expected rent shall be the GAV. How do you compute? Take fair rent, municipal value higher. That higher with the standard rent lower. That is said to be expected rent. You don't have an actual rent to compare. Why? Because it is actually self-occupied. But department say it is deemed to be let out. So there won't be any actual rent. So you take that expected rent itself as the GAV. Is that clear? Is that clear? Very simple process it is. Okay. I think this is what you are saying, right? Okay. What a technology it is. Online friends, 1 second, just wait for a second. Everything gone. Online friends, just a minute. Yes. So let's continue. Yeah. So listen. Shh. Where were we? Deemed let out property, right? So if I have three properties and three of them are self-occupied, then I can only show two properties as self, and the third one have to be deemed to be let out. And for the third one, how do you compute the GAV? How do you compute GAV for deemed let out property? Expected rent have to be the GAV because you don't have an actual rent to compare. That's what the department says. Now, that's the third type of property. Now, one is missing in between. What is that in between? House property is let out for part of the year and self-occupied for the part of the year. What is let out for part of the year and self-occupied for the part of the year? I have a property. I let that property out. Okay. I have given that particular property for rent to a tenant. The tenant vacated. The tenant what? Vacated. Soon after the vacation, I started living in that particular property. Are you with me? Are you with me? I had a property. I told my tenant to vacate. Soon after when he vacated, I started living in that particular property. Or vice versa. I was living in a property. In between a year, I moved into another property and I've given that particular property on rent. This is also possible. That is a separate property. And how do you value the gross annual value if it is that property? So can you read that heading? House property is let out for part of the year and self-occupied for the part of the year. That means some part of the year it was let out and some part of the year it was self-occupied. So what to do? ER. What is ER? Expected rent for the whole year shall be taken into account for determining the GAV. That means you take the fair rent, compare it with the municipal value and compute the higher, pick the higher. That higher have to be compared with the standard rent and pick the lower. For the whole year you have to do this, whether it is self-occupied or whether it is let out. So part of the year self-occupied, part of the year let out means don't worry, take the entire expected rent for the whole year period. And what you need to do, the expected rent for the whole year shall be compared with the actual rent for the let out period, and whichever is higher shall be adopted as the GAV. That means, listen, expected rent for the whole year and the actual rent for the let out year. You don't have to compute actual rent for the whole year because only some part of the year you have let it out. Are you with me? Repeat again. Expected rent for the, repeat. Expected rent for the whole year and actual rent for the let out year have to be compared and pick the higher as the GAV. And there is one advantage is there. What is that? Municipal tax paid for the whole year is allowed as a deduction. Normally for the self-occupied property, you will not get the deduction for the municipal taxes. Yes or no? Since department says that you have to take the expected for the whole year, you can claim the municipal taxes for the whole year as well as a deduction. Are you with me? Is that point clear? So the first thing in examination to do is identify the type of property. Okay, identify the type of property. Self-occupied 11 months, let out 1 month, same. Yes, same treatment. Yeah. So what you need to do is identify the property is the first thing to do. Then you have to compute the GAV accordingly. Are you with me? Moving on to the next type of property. Can you read the next type of property? In case of house property, a portion let out and a portion self-occupied. What is portion let out and portion self-occupied? 2 floors. First floor let out, second floor self-occupied. Are you with me? Are you with me? So you have a house or a portion let out and a portion self-occupied. Then what to do? Treat it as 2 houses. That's it. Proportion, everything. Compute the value on a proportionate basis. So let's see. Income from any portion or part of property which is let out shall be computed separately under let out property category. And the other portion or part which is self-occupied shall be computed under self-occupied property category. GAV shall be computed separately based on the proportion of floor area or any other reasonable basis. So you have to consider it as a two property. Then you have to proportionate the value and compare. Are you with me? Municipal taxes for the let out portion only is allowed as deduction. For the self-occupied portion, no deduction for the municipal value. So everything have to be proportionately computed. Are you with me? Are you with me? So everything have to be proportionately computed. I hope it is clear. That proportion they will say in exams, okay? Otherwise, how will we compute? It's impossible. So that proportion, definitely they will say it in exams. So is that clear? So how many types of properties we have? We have five. This is including this. We have 5 types of property. Which are the 5 types of property? Number one, let out property. How do you find out gross annual value? Repeat. Starting with, compare it with municipal value and pick the, compare that higher with, then pick that lower is said to be, then compare that expected rent with, pick if the actual rent is less due to vacancy, then GAV shall be the actual rent. Which is second type of property? Oh, which is the second type of property? The GAV, or we can say the NAV shall be 0. A person can show up to 2 self-occupied properties or unoccupied properties. That doesn't mean 2 self and 2 altogether 2. Whether it is self or unoccupied. Are you with me? Then, what is the third one? A property let out for a part of the year and self-occupied for the remaining part of the year. A part of the year it is let out and remaining part of the year it is self-occupied. What to do? Very simple. You take the expected rent for the whole year and the actual rent for the let out period and pick the higher. That's it. And municipal taxes for the whole year you can claim as a deduction. Is that clear? Second last type. That is deemed let out property. How do you value? Deemed let out property. Expected rent shall be the GAV. And what is the last type of property? A portion let out and a portion self-occupied. Proportionate everything based on the floor area or any other reasonable basis. That's what they are saying. I hope it is clear. Is municipal tax deduction is allowed for 5th category? Proportionately, yes. Okay, moving on to the next one. There is a concept called treatment of unrealized rent. You tell me, what do you mean by unrealized rent? The rent, the person occupied the property, but he didn't pay me the rent. Rent is payable. Receivable for me. From the owner's perspective, it is receivable. Are you with me? Kind of outstanding, yes. So if it is receivable, then what department say? If that rent, if that circumstance satisfies this 4 condition, don't worry. If you're satisfying this 4 condition, don't add that amount with your actual rent. Are you with me? You can treat it as unrealized rent. So the point is very simple. A person have occupied your property and he haven't paid you the rent. Now the question is whether you have to add that amount with your actual rent or not depends upon satisfaction of this 4 condition. If you're satisfying 4 condition, don't add that unrealized rent along with your actual rent. If these conditions are not satisfying, then you have to consider that unrealized rent also as a part of your actual rent. Are you with me? Are you with me? Great. So starting with the first one, what is the first condition? The tenancy should be in good faith. It should be a good faith, normal commercial agreement. That means you are expecting some rent. It shouldn't be to deceive income tax department at all. You have to make a good faith agreement. What is point number 2? The defaulting tenant has... Hello, read that second point. The defaulting tenant has vacated or steps have been taken him to compel him to vacate. What do you mean by that? Either that person who haven't paid you the rent have vacated the property, or you have to not pull the collar. You have to file a case or something. You have to take some steps to make him go out of your property. Are you with me? And the panchayat alla panna kudadu. Okay, you have to do it in a legal way. Yes. What is point number 3? Defaulting tenant is not in occupation of any other property of the assessee. The person should not occupy any other property of the assessee. If he occupies, then you may adjust the rent with the other property, and there is a possibility to deceive income tax department. Are you with me? So the defaulting tenant should not occupy in any other property of the assessee. Are you with me? Then what is the last point? The assessee has taken all the reasonable steps to institute legal proceedings for recovery of the unpaid rent, or satisfies AO that legal proceedings would be useless. What is that? Say for example, a terrorist. My tenant was a terrorist. He have been captured by the military and killed. Okay. Now if I file a case against that terrorist, will I be able to recover that rent? No. So either you have to tell the AO that I have filed a case, or you should communicate to the AO that there is no point in filing a case against that particular person because he's already dead, or he's already in the jail waiting for the capital punishment or something. So even if I file a case against him, nothing is gonna happen. This have to be communicated to the AO. Are you with me? If that particular circumstance satisfies all the following 4 conditions, then what is the conclusion? You don't have to add that unrealized rent with your actual rent. Without that, you compute your actual rent and compare with the expected rent and pick the higher. Is that point clear? Is that point clear? Yes, so that is section 23 subsection 1, rule number 4 it is. Rule number 4. As per the income tax rules 1962. Okay, 1 second. What is this? Yeah. Then we shouldn't show this amount as, if 4 conditions satisfy, then you have to treat it as an unrealized rent, and you can remove this from the actual rent. Okay. Yeah, if you satisfy all the 4 following condition, then what you can do? You don't have to add that portion with your actual rent. Are you with me? Are you with me? Now we will discuss about the municipal taxes. What to do with the municipal taxes? Let's understand the treatment of the municipal taxes. So can you read this box? Property taxes are allowable as deduction from gross annual value. Municipal taxes you can claim as a deduction. Now, it should be borne by the assessee. What do you mean by that? Say my tenant is paying the municipal taxes. My tenant is paying the municipal taxes. Can the building owner claim it as a deduction? Not possible. If the tenant is paying, then it is not a deduction for you. You have to suffer the municipal taxes from your pocket. Then only you can claim it as a deduction. Then, next one, it should be actually paid during the PY. What does that mean? Listen, this year I have to pay a municipal tax of 10,000 but not paid. It is payable status. Are you with me? I had to pay a municipal taxes of how much? How much? 10,000, but I haven't made any payment. Can I claim this 10,000 as a deduction by putting a payable entry? Not possible. You have to actually make the payment to claim it as a deduction. Are you with me? In year 2, what I did is like, I paid 10,000 for year 1 and 10,000 for year 2. I paid 20,000 rupees in year 2, that is 10,000 for year 1 and 10,000 for year 2. Then what to do? I can claim that entire 20,000 as a deduction. No problem. I can claim that entire 20 as a deduction. So, irrespective of the year for which it is paid, it is always allowable as a reduction on actual payment. Irrespective of the year for which it is paid, you can always claim the municipal taxes on actual payment basis. Only thing you have to check is how much you have paid. In which year? That year, the entire amount that you paid, you can claim as a deduction. Is that point clear? Is that point clear? Online friends, please respond. Are you able to follow what I'm saying? This house property is a given opportunity for everyone. It's a small topic and very easy comparatively. I'm not saying very easy, but comparatively it is easy. Now, moving on to the next one, deductions from the annual value. What are the deductions that you can claim from the gross annual value? What is the first deduction? Under section 24A, you can claim what? Standard deduction. How much is a standard deduction? 30% of net annual value is allowed as a flat deduction. What is this flat deduction? Whether you are incurring an expenditure in respect of that particular building or not, every year you can claim 30,000 as what? Deduction. Are you all with me? What if municipal taxes paid by the assessee is recovered from the tenant? You tell me, you cannot claim it as a deduction because it is not going from your pocket ultimately. Okay. Tenant pays the municipal taxes, won't they recover it from the owner? If they are recovering it, then the owner can claim it as a deduction, otherwise not. Normally it is the owner who is supposed to pay the municipal tax. But in the rental agreement, I can flip it. Say for example, this building is very wanted. Okay. The building owner is saying, CA+B that you have to pay the rent. Sorry, obviously you have to pay the rent. You have to pay the municipal taxes, then only I'll give this building to you. CA+B, maybe they think that this building is like fantastic one. We have to grab this. So they will accept it. If they're accepting it, building owner cannot claim it as a deduction. It depends upon two persons. So if it is going from your pocket, being the owner, you can claim it as a deduction, otherwise not. As simple as that. Moving on. Can you read the second box? What is the second box? 1 second. Yeah. Can you read that? Standard deduction is irrespective of actual expenditure incurred. So whether you have actual expenditure or not, you can claim standard deduction. Then what is next? If NAV of the property is nil, then assessee will not be entitled to claim standard deduction. So 0 into 30% will be 0. That's it. Now, moving on to the next one. Now let me ask you one doubt. Say, I paid an insurance premium in relation to this building. I paid what? Some insurance premium in relation to this building. Or I paid ground rent. What is ground rent? Okay, I think it's Nella Vadagai in Tamil. Ground rent means this land is not owned by me. I've taken this land on rent and constructed a building. Or land on lease and constructed a building. Now I have to pay the ground rent. Otherwise I paid some painting charges. Every year I'm repainting this particular building. So can I claim this insurance, ground rent and the painting expenses as a deduction? No. For everything you are getting a standard deduction 30%. Once you claim standard deduction, no other expenses you can claim as a deduction. You cannot claim any other expenses as a deduction. Are you with me? Are you with me? Standard deduction is full and final. You cannot claim any other expenses as a deduction. Sewerage tax is a municipal tax. Whatever taxes that you pay to the municipality, that is municipal tax. Sewerage tax, then a water tax, then property tax. Everything is paid to the, they are saying municipal tax, not property tax. Are you with me? What is the difference between municipal tax and property tax? All the taxes together is municipal tax, like sewerage tax for your waste clearance, water tax for your water availability and supply. I think in Tamil Nadu, water is free. You only have to pay the taxes. Water is chargeable here. But people were saying water is free, they are only charging some tax. So, up to certain units it's free. Thereafter you have to pay the... Okay, whatever it is, don't worry. But some of the students only told me, the regular students in Chennai only told me that water it is free. Come again? Tap water is free. Then what water? What are the other water that you get? Rain water. So there are two types of water transport here. Only one. That is taxable. That is taxable, but there is no meter charges and all. That's what I said. You only have to pay the taxes. It is fixed or it is fixed. So you can use as much as you want. Oh, it is only fixed time. Like morning from this time to this time. Okay, forget about it. Okay, don't worry. Coming back to the point. Listen. Okay, it is taxable. Agreed. No problem. Now, moving on to the next one. Shh. Okay, it is taxable. During flood time, everywhere free. Oh, is that so, Shakti? Okay, during flood time it is free. Rainwater, anyways, it is free. Okay. Yes. So, yeah, coming back to the point. 24B, that is interest on borrowed capital. Listen, listen. So, this is the last thing that we have to discuss before lunch. We'll complete that interest on borrowed capital. I'm sorry, and we have two more things, okay? Unrealized rent subsequently recovered and treatment of co-owned property. These are the 2-3 things that we have to finish before the lunch. Thereafter, I'll leave you for lunch, okay? So, treatment of borrowed capital. Listen, say you have taken a loan for constructing or for the purchase or for the repair or for the expansion or for the reconstruction of a property. Are you all with me? You have taken a loan for either construction, purchase, repair, renovation, expansion, reconstruction, whatever may be the purpose, but it should be connected with the property. Are you all here? That interest on loan, when you are paying that interest on loan, is allowed as a deduction under 24B, subject to certain limits and conditions. Are you all here? Are you all here? Now, understand first of all, interest on loan allowed as deduction. We can split that into two. Which all are the two splits? Interest for pre-construction period and interest for the year in which construction is completed or property is acquired. So listen, what is pre-construction period? What is pre-construction period? See, today I took a loan and I started my construction. Of my building. If today I took a loan, I have to repay the interest from next month onwards. Are you with me? I should start my repayment, or EMI payment will start from the next month beginning onwards. In the EMI, I have to pay the interest. So this year I'll suffer interest, but there is no property because it is under construction. But interest is there. So what to do with that interest? Interest is there, but property is not there. So what to do with that interest? No. Can I claim it as a 24B deduction from house property head? No. Why? Because there is no property at all. First of all, you have to complete the property. If you have a property only, there will be house property head. Yes or no? So all the interest that you are incurring during the construction period is said to be pre-construction interest that you have to accumulate till your construction completely gets over. Then once your construction is over, there will be house property. Then you claim it as a deduction under 24B according to the method that we say. Are you all with me? Have you understood the logic of accumulating pre-construction interest? Because pre-construction period, there is no property. It is under construction. If you can call it as a property, then you should complete the construction. So until you complete the construction, all the interest that you are suffering have to be accumulated. Once the property is completed, you can claim that accumulated interest in a way that department say. Are you with me? Are you with me? So for this, first of all, you should understand what exactly is the pre-construction period in this. So let's understand what exactly is the pre-construction period. So interest for pre-construction period. Interest for what? Pre-construction period. First of all, let's understand what is pre-construction. Can you read the note? Pre-construction period is the period prior to the previous year in which property is acquired or construction is completed. That simply means, listen, imagine a situation where I took a loan on 1st April 2018. I took a loan on 1st April 2018. Are you with me? Are you with me? Or we will make it 2020, okay? We'll make it 2020. Now, it completed, that construction got completed today. What is today's date? The construction got completed today. Today is 23rd July 2024. Today, the construction got completed. Today only I got the completion certificate from the municipality. The construction got completed today. So you tell me, today, that day, that is 23rd July 2024, in which financial year? That day is in which financial year? 2024-25 financial year it is. Are you all with me? It is in the year 2024-25. So friends, listen. If it is in 24-25 financial year, then what to do? This year will be the first year of completion. This year will be considered as the year of completion. Then, when is the pre-construction period in this? From which day to which day is the pre-construction period? From 1st April 2020 till 31st March 2024 is the pre-construction period. Why? Because the year of completion of construction is always regarded as post-construction period. We can say post-construction, okay? The year of completion of construction is always regarded as a post-construction period. The year just before that will be the last pre-construction period. Are you with me? Are you with me? Now, can you read this note again? Pre-construction period is period prior to the previous year in which property is acquired or construction is completed. Are you all with me? Are you? It's not months, okay? From 1st April 2024 till 31st March 2025, all the interest is post-construction period interest, okay? Yes, it is normally like that. So, read this again. Pre-construction period is the period prior to the previous year in which property is acquired or construction is completed. Now, what to do with the pre-construction period interest? What to do with the pre-construction period interest? Accumulate everything and claim the total interest in the pre-construction period shall be claimed in 5 equal installments from the year of completion of construction. Are you with me? Are you with me? Online friends, am I audible? Is there any problem with my voice? Please respond. Am I audible? Is there any problem with my voice? All good. All clear, right? Good. Now, moving on. So, pre-construction period is the period prior to the previous year in which property is acquired or construction is completed. And there is a note under that. Can you read this note? Pre-construction period starts with the date of launch, ends with 31st March of the PY, prior to the PY in which such property is acquired or construction is completed. Are you with me? Now, friends, listen. So, what you need to do is, what is post-construction? Interest for the year in which construction is completed or property is acquired is said to be the post-construction period. And what to do with the post-construction interest? Interest relating to the year of completion of construction or acquisition of the property can be fully claimed in that year. That means for the 24-25 whole interest you can claim as a deduction in that year itself. Are you with me? Are you with me? We will take some figures for a better understanding of this. So listen. Say for example, I took a loan of 10 lakh rupees and I took this loan on 1st April 2021. Okay, I took the loan on 1st April 2021 and the interest is at 10%. Interest is how much? 10%. My construction got completed. My construction got completed on today, 23rd July 2024 is the completion date. Forget about principal repayment. Assume that there is no principal repayment for that particular loan. The principal is still 10 lakh. It's nothing repaid till now. Are you with me? So you tell me from which date to which date is the pre-construction period? Pre-construction period is from which day to which day? From 1st April 21 to 31st March 24 is the pre-construction period. Are you with me? So 1st April 2021 to 31st March 2024, how much will be the interest? 10 lakh into 10% for a year. So 21, 22, 23, 24. You have 3 years. Are you with me? 22, 23, 24. You have 3 years. So into 3 years. How much will be my total interest? 3 lakhs will be my total interest. What to do with this 3 lakh? I have to accumulate. I have to accumulate. And I have to claim it as a deduction in 5 equal annual installment from the year of completion onwards. Which is the year of completion? 24, 25 is the year of completion. Are you with me? In 24, 25, there will be 2 set of deductions. Number 1 for the current year interest. There will be current year interest because the loan is still pending. So that will be 1 lakh. Are you with me? Why become 1 lakh? 10 lakh into 10%. And how about the pre-construction period interest? 3 lakh divided by 5. That will be 60,000 also will be there. So all together I can claim 1,60,000 rupees as a deduction in the year of completion according to this example. Are you all with me? Are you all with me? This is how you have to claim a deduction under 24B if there is pre-construction period interest. I hope it is clear for you. Have you understood? I think all of you got an idea. You were asking doubts in relation to this. So I think all of you got an idea. If it is completed on 23rd March, pre-construction period ends on? Yes. Yes, 2023 March itself. Yes, that's right. Moving on with the next one. What is next, friends? So now imagine a case where, one second, friends. All right, listen. Say for example, for let out property, there is absolutely no restriction for what? Interest rate. How much ever is your actual interest, you can claim that particular interest as a deduction. For let out property, deemed let out property, and a property where part of the year self-occupied and part of the year let out and all does not have any restriction for the interest. But if your property is a self-occupied property or a portion of a property is self-occupied, then there is a ceiling limit. Then only there is a ceiling limit. Why there is a ceiling limit? Why? Because we are not charging any income from that particular self-occupied property. So we are not allowing you to claim all the interest as a deduction as well. We are restricting your deduction. Fair enough. Are you with me? Since we are not charging any income from that respective property, we will restrict your interest deduction as well. We will put some ceiling limits for that. Are you all with me? Are you all with me? Now let's understand what exactly is that particular ceiling limit. So what is this heading? Can you read the heading? Deduction in respect of self-occupied property where annual value is nil. If the annual value is nil, means self-occupied property net annual value is nil. There is a ceiling limit for the deduction of interest that you can claim, and let's understand how much is the ceiling limit. So what is the first one? Can you read the first yellow box? Loan borrowed before 1st April 1999. So you took a loan. Before 1st April 99. You have taken the loan before 99 April. Then what will happen? Maximum deduction shall be, the deduction shall be actual interest payable for 1 or 2 self-occupied properties subjected to maximum of 30,000. So it always subjected to the actual. If your actual is less than 30, then you will only get actual. If the actual is more than 30, you will get only 30. Are you with me? What is actual? What do you mean by actual? Actual interest. Are you all with me? You have taken a loan before 1st April 1999 and you are suffering some interest. How much is the maximum deduction for the interest? Maximum deduction shall be 30,000. Now let me ask you one question. How many properties you can maintain as self-occupied property? 2 properties. I have 2 properties. For both of them, I have taken a loan before 1st April 1999. For both the properties, I took a loan. And both the loans were before 1st April 1999. Can I claim 30,000 per property or is it a combined threshold? Combined threshold. For both the property together, I can claim maximum 30,000. Are you with me? and that also subjected to actual. Are you all with me? Now there is one more thing. Yeah, what happened? Is there any problem? Come again? From outside, huh? Now, listen. Say, as you all know, when you claim a year's deduction, there will be 1/5 of the pre-construction period and current year interest. Everything together maximum 30. In whatever permutation combination it comes. If the loan is before 1st April 1999, in no permutation combination, you are allowed to claim more than 30. In no permutation combination, you cannot, or we can say you cannot claim more than 30. Are you with me? Are you with me? That is the first box out of it. Now, what is the second box? Can you read the second one? Loan borrowed on or after 1st April 1999 for construction or acquisition of house property, and the same is completed within 5 years from the end of the financial year in which capital was borrowed. Listen, you have taken a loan when on or after 1st April 1999. Say today. Today is after 1st April 1999. So today I have taken a loan. What is the purpose of loan? That is very important. What is the purpose of loan? Either for construction or for acquisition. Acquisition means purchase. Either for constructing a property or for purchasing a property. And one condition is there. If you are constructing the property, then it should be completed within 5 years from the end of the financial year in which the capital was borrowed. Imagine I took a loan today. What is today's date? 23/7/2024. I took a loan today. You tell me which is the financial year in which I took the loan. This date comes in between which financial year? 2024-25. When is the last day of the financial year? When is the last day of this financial year? 31st March 2025. Last day of this financial year will be 31st March 2025. From that day, I have to complete my construction within 5 years. So within 5 years means when? That is 26, 27, 28, 29, 30. That means I have to complete the construction before 31st March 2030. Are you with me? Read this again. Loan borrowed on or after 1st April 1999 for construction or acquisition of the house property, and the same is completed within 5 years from the end of the financial year in which capital was borrowed. I borrowed the capital today. This is 24-25 financial year. From the end of this financial year means 31st March 2025. From that I have to complete the construction within another 5 years means 31st March 2030. I should complete the construction. Then only I can claim a deduction up to 2 lakh. Then only I can claim a deduction of up to how much? Up to how much? 2 lakhs. For claiming 2 lakh deduction, this is mandatory. First one, I have to take a loan after or on 1st April 1999. And the purpose of loan should be construction or purchase. Say for reconstruction or repair, I have taken a loan. For expansion or repair, I have taken a loan. Can I claim deduction up to 2 lakh? No. That's why I have highlighted that. It should be either for the construction or purchase. In the case of construction, I should complete the construction within that 5-year time allotted. Are you with me? If everything is okay, then you can claim a deduction of up to 2 lakh. And imagine, I have 2 properties. I have what? 2 self-occupied properties. Both I took a loan after 1st April 1999. One is for construction and other is for purchase. All the conditions are satisfied. Can I claim 2 lakh per property or combined threshold 2 lakh? Combined. Maximum I can claim only 2 lakh. Are you with me? Maximum I can claim only what? 2 lakh. Now, moving on to the third case. And there is one more thing. When you claim that 2 lakh, it is the maximum of both 1/5 of the pre as well as the current year interest. Altogether, you can claim maximum 2. It is not current year alone. Come again? முடியாது. Property ஒன்று தானே இருக்கு. So you have two self-occupied properties. Oh. Ama, paravalla. Kadakkyadu. 2 lakh ta kadakku. That's what I said. I have two properties. Two loans. All together 2 lakh. Maximum combined threshold 2 lakh. It's not per property. For a person 2 lakh. Not for the loan, not for the property. Purjida? Great. So that's what we were saying. So deduction shall be actual interest payable for one or two self-occupied properties subject to maximum 2 lakh. That is one or two. Maximum 2, not per property. Maximum 2. Now, the limit of 2 lakh shall be after including 1/5 of the pre-construction interest. The 2 lakh have to be determined after adding the pre as well as the post. Maximum 2. Are you with me? Are you with me? Now, moving on to the third scenario. You took a loan after 1st April 1999. But what is the purpose? Either repair or renovation or construction of the house property, but it is not completed within 5 years. Then how much is the maximum deduction? How much is the maximum deduction? You can claim only 30,000, including one or two. Maximum combined threshold 30,000. Are you with me? Now let me create a scenario. Say, I have a property, I have a house where I took a loan before 1999. Say I took a loan on 1990. I took a loan on how? When? 1990. And current year interest is say 40,000. Current year interest is how much? 40,000. I have another house. I took a loan after that. I took a loan on 2021. I took a loan on 2021 and it is for purchase. And it is for what? Purchase. Then current year interest is for that property is say 2,40,000. Not 2,40,000, I'll take another figure. 2,80,000. Okay. Current year. Okay. Yeah. So current year interest is how much, friends? What is this? Now, how much is the current year interest, friends? Current year interest, 2,80,000 in the second case. In the first case, when you compute the deduction, how much is the maximum deduction? Go on again. 1 second, friends, 1 second. What is this? Yeah. For the first loan, for the first house, how much is my maximum deduction? How much is my maximum deduction? I can claim only 30,000. For the second house, how much is my maximum deduction? I can claim only 2 lakh. But there is another problem coming. What is another problem? I have two self-occupied properties. One have a limit of 30 and the other have a limit of 2 lakh. Both of them maximum I can claim 2 lakh. Not more than that. I cannot claim 2,30,000. Altogether, I can claim only 2 lakh. Are you with me? Are you with me? If instead of purchase, say I took a loan for repair and the interest is 2,80,000, then how much is my maximum deduction? 30,000 is my maximum deduction. Then you tell me how much is the maximum altogether? Not 60, only 30. Highest of the limits. If both the limits are 30, altogether 30. If both are 2, altogether 2. If one is 30 and another is 2, altogether 2. Have you understood? Have you understood? Point, I'll repeat again. If both are 30, altogether 30. If both are 2, altogether 2. If one is 30 and the other is 2, altogether 2, not more than that. Yes. Yes, co-owned property, 2-2 or 30-30. We are about to discuss that, co-owned property. That's why everybody is recommending joint ownership. Provided you should not expect any divorce and all in future, okay? I hope you understood what I mean. Co-owned property, there is another treatment that we will study. I mean, depends, okay? That we will study maybe before the break or after the break, don't worry. Yeah, so have you understood this much? Have you understood this much? Yes. Clubbing provision, no. No. Even if there is clubbing provision, computation happens in the name of the other person. Then only the net income will be clubbed. Understood? Clubbing provision and this may come together, but in the clubbing provision, it's very clear that that person hand you have to compute everything. Then only that net portion have to be clubbed. So even if there is clubbing, you can claim separate 2 lakh. Yes. No. Unexhausted portion and all, there is no carry forward. You cannot carry forward it. Gone. This is actually year 1. Anyways, your actual interest will be more than, I mean, in Chennai, I think to buy a property, you have to pay minimum 1 CR maybe, right? I don't know. 1 CR. I mean, with 1 CR, will you get a property in Chennai? Depends upon the area. Chennai city limits will be very expensive, right? T Nagar. This is, what is the place name? Kodambakkam. And where is Nungambakkam? I know, I visited Nungambakkam a lot of times for my CPA. High rate, very expensive. Due to ICA? No. Yeah. So, listen friends. Shh. Listen. Where were we? We were discussing about the combined thresholds. I hope it is clear for you. Yes. Completed construction. Okay, I think this is the old one. Loan 1995, completed 1997, PY 2023. If you don't give a pre-construction interest. No, how can we pay? No. There won't be any pre-construction interest in that case. 31st March 2030, 30 deduction. Okay, in case 30. Both case with what is WEH? Weather. Whichever is higher, whichever is higher. No. Like this. Property rates at Nungambakkam and Nagar, Alwarpet and all too costly. Maybe. Chennai is a metro city, so of course, they can justify the cost, no problem. Yeah. So friends, that's what we were about discussing. And can you read this note? Total interest deduction as above shall not exceed 2 lakh in any case. Whatever be the permutation combination, it shall never exceed 2 lakh. When it comes 2 lakh, either 22 or 32. Are you with me? Now, there is one note under this. Can you read the note? The ceiling prescribed for the self-occupied property as above does not apply to let out or deemed let out property. So let out and deemed let out property, the ceiling limit is not applicable. Then deduction for interest is available on accrual basis. It is not like municipal taxes. If it is payable also, you can claim the deduction. And what is the third one? Where a buyer enters into an agreement with the seller to pay sales price in installment along with interest, it also shall be considered as a loan. So you are paying with interest to the buyer in installment. No problem. That interest also you can claim as a deduction. Now, note number 1. Interest on unpaid interest is not deductible under 24. We call it as penal interest. Have you heard about penal interest? There is some overdue and bank is charging interest on interest. Not deductible. You cannot claim that as a deduction. Come again? Compounded, it's a kind of normally we say penal interest. You haven't paid the EMI on time, there will be interest on interest. That you cannot claim as a deduction under 24. Then, note 2. For claiming deduction up to 2 lakh, as above, assessee should furnish a certificate from the lender, specifying the amount of interest payable. If the certificate is not produced, deduction shall be restricted to 30. You should prove that. Okay, you should have to submit a interest certificate from the bank, then only you will get a deduction of up to 2 lakh. Otherwise, they will restrict it up to 30. Yes. So we'll do one thing. Oh, it's only 1:15. So I'll take 10 more minutes and finish this off. Okay. I'll take 10 more minutes and finish this off. Otherwise, we have only not 10 more minutes, 5 minutes is enough. Okay, 5 minutes is enough to finish. Listen, section 25A, provision for arrears of rent and unrealized rent received subsequently. Imagine a situation. Say my tenant occupied my property. Shh, listen. Imagine a situation where a tenant occupied my property for 4 months. Then all of a sudden he absconded. I searched for him, he escaped. Okay, he went to some other cities. So all the 4 conditions have been satisfied also. So I consider that 4 months rent as what? Unrealized rent. A tenant occupied my property, then he left without paying the rent. So I consider that 4 months rent as what? Unrealized rent. Are you all listening? So 4 months rent we have, and that 4 months rent is now unrealized rent. Now, after some time, he came back. After some years, he came back and he repaid he went to some saint or something, or Guruji or something. That Guruji said, you have 4 months rent pending that you have to pay today. Otherwise, you will not get moksham. So he thought of getting moksham and he came back and paid that 4 months rent back to me. Are you with me? Now what shall I do with the 4 months rent? In the year of subsequent receipt, that 4 months have to be treated as what? My rental income. It is treated as subsequent recovery of arrear or unrealized rent. Then from that 4 months rent, I can claim what? 30% standard deduction. The rest shall be fully taxable under the head house property. Are you with me? And there is one interesting fact is there. That have to be taxed under house property whether or not I own that particular property in the year of receipt. Say for example, see, last year my tenant escaped. Last year my tenant escaped and he is supposed to pay me 4 months rent. Are you with me? This year he came back. But this year beginning I sold my house property. This year beginning I sold my house property. Are you with me? Are you with me? This year beginning I sold my house property. Now this year beginning he came back and he paid, or this year today he came back and paid me 4 months rent. So when I am getting this 4 months rent, I don't own a property. Do I am the owner of the property? Do I own a property today? No. But still I have to show it as an income under house property and I can claim 30% standard deduction. Are you with me? Are you with me? Very simple. So one property is 30 and another property is around 160. Then yes, 190 you can claim. 190 you can claim. Altogether up to 2. Okay. Will it not be taxed under IFOS? No. That's what I said. It have to be assessed under house property even if assessee is not the owner of the property. Okay. It is like that. Now treatment of co-owned property. In one sentence we can finish it off. Listen. Say I have a flat. Are you all listening? Are you all listening? Thank you, sir. Now only got the chart PDF. Okay. Today morning I think I have increased my degree of what do you say? Hope you understood. Okay, I become a little bit aggressive today morning. So maybe I think it's my mistake. Yesterday morning itself, if I was so aggressive, then you could have got everything on yesterday itself. Okay, so yeah, don't worry. And please pardon for the delay. Okay, yes. And where were we? We were discussing about the co-owned property. Okay. I was about to say something. I forgot. Don't laugh. This will come to you after you qualify. Okay. And you will never remember names. I have a problem of remembering names. I don't remember names. I don't remember facts. I remember dates. I remember everything. I don't remember anything. Okay. I don't remember names. I don't remember facts. I always forgot. Forget. Even I forgot once soon after marriage. One of my relatives came to me and we met in a mall. My wife was with me, okay. And they asked her name. I forgot her name. Damn. I know, but it is not coming. I was like this for 5 minutes. My wife started staring. What? Then I got it, okay. Otherwise, I won't be here. Otherwise, I would have died at that moment itself, okay. Somehow I escaped. So this problem will come to you. especially on July and October. July and October, you will not remember anything. Okay, even you will forget the place where you stay also. Yes, it is like that. Certain morning when I get up, I still think that I am in Coimbatore. Okay, it is like that. These kinds of syndrome will come to you. After this due dates and all, my God, then it's a kind of another life we have. Okay, but that life, normally you don't enjoy. Because during that, from that busy period, if there is nothing to do in the evenings, then you will get bored. Okay, and you don't have Sunday, you don't have Saturday, you don't have public holidays. You have your own holidays. The best thing to do, switch off your mobile phone on holiday. Otherwise, it won't be a holiday. Okay, once you qualify, it's always to switch off the mobile phone. If you want to enjoy the holiday, switch it off. Whatever happens, switch it off. That's it. So, what to do? Yeah. So, coming back to the point. Yes. Say, I have a property, okay. I have a property. And it is co-owned. Come again? Chatla enna potrukka. Petition to take Avesham 2 with JK sir as hero. Even I will forget my name, okay. When me sir, I don't remember faces of people. I can only remember if I meet them for 5-7 times. I think everybody is like that, right? Yeah. Rangachetan, okay. You make me Rangachetan. All right. So listen. Say I have a property and it is co-owned. I am the owner and my wife is the co-owner. Are you all with me? Then the greatest advantage of it is, if it is a self-occupied property, I can claim up to 2 and my wife can claim up to 2. It is always per person. That ceiling limit of 2 lakh or 30,000 is per person. If my actual interest is say 4 lakh on one property, this is my property. I took a loan on this property and I'm eligible to claim up to 4. 2 for me and 2 for my wife if we are equal owners. Is that clear? Is that clear? Yes, I hope you understood. I mean, you were asking a doubt. I hope you understood it, right? So if it is let out, then there is no advantage. Anyways, I can claim the entire interest as a deduction. If it is a self-occupied, then there is a real advantage because you can claim 2, your wife also can claim 2. Or you can claim 30, your wife also can 30. Depends upon the type of interest and type of property it is. Is that clear? Is that clear? Superb. So we'll do one thing. Now we will go for a break. So go enjoy your break and come back at 2:30. Okay, 5 minutes extra. If the construction is not completed within 5 years, then maximum 30. Maximum 30. Some example, that's what I've told you. Say the interest is total 4 lakh for one property. It's co-owned by me with my wife. Even though the total interest is 4 lakh, out of that 4, I can claim 2 and my wife can claim another 2. Got it? Ragul, I hope you got it. I can claim up to 2 and my wife also can claim up to 2. So altogether we can claim together 4. In let out property, no limit for interest borrowed. No limit. It's one the advantage, yes. This is advantages. That's why most of the people are preferring co-ownership. Yes. So go relax and come back at 2:30, okay? I took a loan for me 2 lakh limit, for my wife 2 lakh limit. Is my wife's salary clubbed with me? Yes. Even if it is clubbed, you can claim 2 lakh separately because only the net income will be clubbed. The computation have to happen with your wife. And after adjusting and deducting everything, the net income will get clubbed. It is like that. Yes. You don't have to club the gross income and claim the deduction. The net income will get clubbed. Okay. Sir, there any question combine of salary? Yes, we have a question. I think I have put it over there. In the afternoon session, we will solve it. I think we have a question. Combining salary and house property. Yes. Yes, this question. Question 7 that we will solve in the afternoon session. Okay.